And here is the analysis on gold for 1 to 3 months. So we were in this Bitcoin analysis. I'm going to switch this over to the gold market. And this, yes, is the busiest chart maybe that you will ever see anybody put up. It has just a fantastic amount of information on it, where those green zones are rising phases and these cycles in here. This big cycle over here is a very, very important one that you see right there. There's a mid-cycle low right over here that you see lined up that actually is silver that has that. So what do I have on here? I have silver, I have GDX, I have the minor cycles in gold, and the dominant cycles in gold. When you get nested areas, and these yellow areas right over here where you see nesting, once you break out of those, you have big upside moves. And we did a great job predicting these upside moves in here. And the last one we thought would get it to 2,000. It got over it with a $435 upward impulse. So now let's look at where we are right now. And this is really key. What we had happened was that all of this correction going on that you see right down over here and this major one here, all of that came at the right time. And then you were supposed to get a bottoming and a rally that we saw in here, and we were projecting up here to make at least a double top or to get much higher. But once it breaks underneath this low, and on the 9th of November, we warned on that, saying that we were worried about a breakdown. And for the last 3 weeks or so, we've been very cautious in here, saying that there were issues. And the gold market did break down this week. That now moves all of our projections down. This low right over here points to a low in February. There's this other blue one over here that points to a low in May, and there's another one goes out to September, October. All of this is suggestive of the fact that gold is done. And the big bull move that we loved and we saw really looks to us like it is over. And this would be, let me just get a little closer look in here. Right now, looking for the silver, gold, the gold miners, all of them, and gold miners have had some breakdowns also, all looking like they're going to move down into this nested area, February through March. And it means that if rallies come in here in this red zone, and see there's no other red zones in here because of the breakdown, that would then give you an area that I think gold needs to be sold, and the gold miners need to be sold in rallies where it comes back in here. It came down to this support area that you can see in the mid 1700s. We're projecting it to get down now to under 1700 here in late January through sometime in March. As all of these cycles will be pushing to the downside. The silver cycle has not broken down yet, but it is very close, as silver is really plunging today, down 3.2%, 75 cents, pretty big downside in there, and showing some risk. The silver is a stronger pattern, though, than gold is right now, which has, to us, a very clear breakdown. Rallies need to be sold, and again, this might be all about the deflationary forces out there taking hold again. And if that's the case, well, what we see in Bitcoin is it collapsed overnight. What we see here in the gold market on breakdowns, all of those things could be really taking hold, and investors are thinking about that right now. Yeah, they're moving into stocks that look cheap to them, that haven't had big upside moves, as they're moving money out of other things that did have big upside moves, but this is just a lot of swapping of money that's going on with some deterioration and some things that would be affected by a deflationary force, and you see that right in here. So the gold market in bad shape, really, when we look at this. And we're going to, for our members, on Future Speak, we do on Wednesdays, we give all of the daily information also. So make sure that you watch that on Wednesday for levels 2, 3, and 4 in our members, where we look at 24 different futures contracts, a really deep look at that, looking at different pictures of the different time frames. That's the word I'm looking for. Now I want to show you something as we look at the gold market. So here is a 2-hour chart of gold, And this is the kind of things you're going to be getting in our chart streams right now. And what we've added in here, a lot of people have liked the projection oscillator and how that works with the slim ribbon and other indicators we use. Well, what we've done, and is an amazing job, and RV gets credit for this, is that we've created a new indicator. And that indicator is the slim ribbon PO. And what that does is it takes all of the information off of the slim ribbon that you see right here for momentum purposes, and it puts it into this with as if you're looking at a projection oscillator with all of the coding from the slim ribbon in it. Fantastic, just unbelievable. So what it shows you is that when it's green, we're in a period where the momentum is up, and you can see right in here. That's a period where you want to be biasing your trading to the long side. So we're looking at a 2-hour chart right over here. So that would be probably the longest time frame that anybody would be using when they're a day trader, an intraday trader. So that's what we're showing you right in here. When it turns negative and the momentum is negative, and you can see this bear flag that built in here, it went negative right here, and then it went neutral. And what happens is that once it goes red again, it tells you that the momentum is negative. And what we have added in here is our reversal scout. So that's this line right in here, and that is a complement to the slim ribbon and the projection oscillator, slim ribbon PO. And when they're all aligned together and you get these signals of confirmation right in here, as these arrows show you, there is a lot of downside risk, and you see how that came in here. I don't know how anybody could trade without really having this handle on what the momentum conditions are and when the biggest impulses are likely to come. You can see in here, turns green. You have signals in here on the long side, and the big upside impulse comes. Here it turns red. All of this stuff aligns on the downside. Let me give you a little closer look at this. And you can see as it brought this big selling. When you have this turning red, it's a period where your bias is to the short side. When you get the arrows, these are confirmations, or they tell you add to a short position or even initiate. And when the reversal scout is aligned with all of this, well, it just tells you how the momentum is quite negative. This is a great look at just these last couple of weeks in gold right over here, and how it gave you great signals. So right now we're in this negative condition still. As you can see, we're not going to really be on the long side when we see that at all, even though people certainly may be tempted by that. So that is a look at the gold market. As you look at here, the negative condition that you look at for coming months out there, and here for very short-term traders, all of that information with our reversal scout, slim ribbon PO, just giving you great information. So that is a look at the gold market, which we see as in trouble.